Okay, welcome to part four, rather. Sorry, the last one was so exciting, I forgot which side we're welcome to part four of tonight's Opportunity Zones Meetup event, where our topic for this evening is specialty tax considerations. Again, my name is Karl Dakin. I work with a variety of Opportunity Zone projects as a capital coach, and a principal, and am involved in several fundraising projects. I have with me for tonight's program Covi, who is an expert in what we'll call exotic, not strange, but exotic tax benefits. And we are going to have a forum here where we're going to talk about how we might be able to leverage these to optimal benefit within an Opportunity Zone project. And feel free, members of our audience, to jump in with questions at any time. And Sean will answer the hard ones, and I'll answer the easy ones, and we'll go from there. But I'll kick off with, I think a couple of the strong things I took away from your presentation was that the Opportunity Zone tax incentives are really addressing one type of tax, and that is the capital gains tax that is either already going to apply to a past capital gain, or if it's reinvested into an Opportunity Zone, we have the chance to get a waiver of those capital gains taxes after a 10-year time period. But during the 10-year time period, a lot of the businesses we're looking at are going to be generating ordinary income, and they're going to be taxed every year. And predominant form of business structure for an Opportunity Zone business is a partnership or LLC. And again, the predominant form of business structure for an Opportunity Zone fund is a partnership or LLC. So when those ordinary income is generated in year-to-year operations, those taxes are coming down the pike right at the people who've made the investment, and they're going to end up having to pay taxes on that. That's a negative for two reasons. One is you've got to pay the taxes, and you've got to make sure that your structures are allowing for enough cash to come through to follow that tax liability to pay those taxes. But at the same time, if it's taxed as ordinary income, that money is not being rolled over, it's not being reinvested into the community, and it's diminishing the potential impact of that original investment. So a lot of things you were talking about were going to other kinds of taxes, which allows you to do better tax management, and at the same time it is addressing the ordinary income that most of these Opportunity Zone businesses are going to be generating throughout the 10-year time period. So this is a way for them to better manage their cash flow, better manage their taxes, and that money allows it to work harder in the community.
Agreed.
So, okay, we're done here, but no. I was interested in some of the questions that Ron was raising in the last section, and throw a little bit more on top of that. The case study I presented last week at the State Opportunity Zone Conference, we were talking about using Opportunity Zone investment borrowed from a whole life insurance policy in order to make an investment into that community. And to that point, the incentive to invest may be fully met by getting borrowing from their whole life and policy with everything that comes with that dual benefit. But the point that I also made, and was kind of the emphasis of my point, was the guy who spoke a couple ahead of me on case studies was from Colorado Springs, and they had a beautiful hotel project that was going to be about $140 million. But he went to the city and asked the city for about $14 million of tax incentives for a parking garage and hookups and other things in order to make that project viable. When you go into a small community, particularly a rural community, those cities do not have that kind of money to help out, and that you have to look to stacking Opportunity Zone benefits with other types of programs. And so you've been talking about ones at the individual business level, and there's some other ones that we can also look at, like there is called the PACE program, where if you put in environmental retrofit or new power generation or even new build, and you put in equipment that exceeds the common code requirements, that equipment will qualify for third-party funding that it can be paid back out of the property taxes of that particular building. So it's good from the standpoint it creates a new source of funding. It elevates the environmental benefit by reducing the negative impact. And from a funding standpoint, I can do a capital stack where I can use part of that money as my down payment, the money that ordinarily I would have to match 4 to 1, 5 to 1, or something 2 to 1 in order to get the money in. But a lot of businesses and banks will treat that original third-party money as the same as an equity down payment. So it gives me a benefit there. There are other programs in the state called the Jump Start program. If a county opts in and they create a first-of-kind business within the state, one that's never existed here before, they can get a variety of tax credits that apply to them at that point. And it goes on and on and on. And what we typically will find, and this was part of the conversation at Pueblo Food Summit last week, is that most people, as you've described, they don't know about, they don't have the experience, they don't have the ability to implement and take advantage of all these things. And so the general rule is they do nothing because they don't know. That's the most common issue. But when they do know, they have a hard time finding help, finding someone with the experience and making that work for them, which may make all the difference between whether the project happens or it doesn't happen. So Sean, basically, if I'm looking for an expert with your background and skills, where would I go? Do I open a Yellow Pages, old school? What keyword would I search on the internet? Where would I go to find someone who does the kind of things that you do?
Great question. And as far as Yellow Pages go, I'm rearranging some kitchen cabinets because I'm doing some remodeling, and found an old one in a kitchen cabinet and just chucked it immediately into the recycle bin because I looked at it and said, what use do I have for this book of paper? So where do you find someone? Unfortunately, the tools that I shared today are not common enough for someone to know who to Google to find a specialist. Usually you would plan on having your CPA do this because most people and business owners rely on their CPA for almost everything financial. And I do partner with quite a number of CPAs, so there are CPAs who are familiar with everything I've shared and who would refer a person to someone like me or myself to handle this. But the majority of CPAs I've run into aren't familiar with these tools, because not that once I share it with them, they go, oh yeah, I recognize that. It is that because they don't do the non-accounting work that is necessary to document the data needed in order to qualify or argue for the retention of these particular tax savings under audit. Most CPAs are not going to recommend something that they don't feel they can support in an audit. And if they don't personally have someone they can refer, that makes it a lot more challenging. So if you can't Google someone, and you could Google each of the items I put up on the screen individually, and you could probably find different practitioners who would do them. It could take some legwork to find someone who does all of them. I'm going to say is a little bit more challenging. I don't know that there's any one job category, job title, or business title that you can Google in to find that. Googling specialty tax incentives could be a starting point. Asking your CPA for referral could be another starting point. And I do work nationally, so if anyone would like to reach out to me, my phone number was at the beginning of part 3. You're welcome to reach me and ask me there as well.
Great. No, I fully understand the difficulty there. When I decided that I was going to try to rebrand myself, not to be a classical angel pitch expert, but to be someone who can work with any form of money from any source at any time, that's when I came up with the Capital Coach label. And to test it before I adopted it, I did a Google search on Capital Coach. and I found a shuttle in DC that would take you past all the monuments. So at that time, I determined the good news was I'm going to be unique, but the bad news was it would still be hard for people to find me. Ron.
I have a question for both of you. It's a related question. Offline, we were talking about maybe a lot of what you do really applies to bigger organizations, more employees. Is there any way in an innovation hub that you could pool together the needs in some way and have the kind of volume that might work for you?
That's this is a follow-on to some of the things we talked about earlier. We've suggested, and particularly in large-scale projects, but it could be a standalone business, that you act as a super incubator, and particularly what's recommended is you buy some of these things that you might include in your list, which are specialty equipment, ones that people couldn't commonly afford to buy on their own, but they're going to kind of use the shared co-op approach within the building. And so then I would guess that to take full advantage of this, you'd have to do something in structuring the core business to be the center recipient of these tax benefits, and then they may either be able to pass them through, or they may simply show a reduction in rents or fees or something to reflect that.
The pass-through methodology, I would think, would work. I haven't explored this in depth yet, but on the surface of this conversation, if the business that is owning the equipment is taking an R&D credit for that and it's owned in a flow-through entity, yes, that does flow upward and they would each get their respective share. But owning I would think most people in a innovation hub situation are not coming together for combined ownership of their entities, but rather mutual synergies that grow each of their own. Maybe there's differences to that, but then it becomes a little bit more difficult if only one is owning it, because a lot of what I talked about, the benefits inure to the owner, and if it's only one owning it, that could be a little different.
Yeah, so let me chip in a couple more thoughts on that. Some of the models we've been looking at would follow that of a research and development consortia, where you have an initial group of people who all share in the ownership of the entity to begin with, and they're core owners as such, and they choose the agenda or the goals for that particular organization. And then other people can chip in on a project-by-project basis. So you have a core ownership which participates in everything, and then you have an opt-in ability on a project-by-project basis, which would not necessarily be ownership in the building, but it would be potentially in the project. Yeah, go ahead with your next question.
There's another piece to this, and that is most innovative operations are very few people, certainly initially, and almost none of them know anything about accounting or taxes or how to get a business license, and they wouldn't even be seen dead with an attorney. So they are experts in other things, all the way from mechanics to high performance liquid chromatography. So if you could put together services that help people actually get to the business of doing what they do and help take care of the things that get them into trouble that they know nothing about. This is a model I've been talking to about some people over in Utah. Might sell. I don't know if Karl, in your experience, has it sold? Is there a model that could be put together where services are part of this, and you're much higher level of knowledge, experience, and ability than just any old person out there? Sorry.
Right. Well, what I would suggest, based upon what I've heard and what we've been talking about with the innovation hubs, is to begin with the innovation hub we're trying to go to is, I want to call it a higher professional model of incubation. We're going to have themes. We're going to be pursuing solving particular problems. It's not anybody who shows up. Not everybody's going to be permitted to come in the door and benefit from the hub. And that would allow charging higher fees, which would allow engaging experts as part of the back office services or the common services that are provided to all the different technical companies that are engaged. So in addition to sharing unique kinds of equipment, you could also have unique kinds of services that are built into the package that would provide the advice in some manner. The question I have that follows that is that you said one of the problems here is keeping your books in a particular fashion, so you could pull that data automatically into some of these forms or some of these applications. Is there a software add-on or macro that is out there today that you might stick on QuickBooks or something of that nature that would help gather this information, or is that an opportunity that needs to be addressed?
Not to my knowledge does that exist. And I don't believe at first that it could be addressed in a software manner, because a lot of the information that's being gathered is subjective. The R&D credit is something that you need an expert, and perhaps with AI down the road, we might be able to get closer to something like that, but I don't think we're there yet. You need subject matter experts focused specifically in that area who can ask the right questions, get an answer, give a follow-up question to hone in on what they're looking for, to then provide the data that the company needs. And that's not something that can be automated easily. So while the WOTC tool that I spoke about does have some automation, the automation is more to help the HR department get the questionnaire in front of the applicant, get the questions answered back, automatically screen for different categories. Perhaps I encourage the applicant to question an answer if they find publicly available data that contradicts an answer. That's all real-time stuff that can be done. That's already being done. But in the end, once you get the screening through, then the employer's system has to be set up so that once the employee hits 120 hours, another thing happens, and then we need to know their pay. And because there's so many different types of systems that businesses are using, it would be much more difficult to have that one system that's already doing this tie into all of those. So we're still at the infancy of the subjective nature of things that really doesn't allow us to automate as much.
Okay.
QuickBooks is perfectly capable of doing a very adequate job of cost accounting for research and development. The problem is the practitioner needs to set up, needs to organize his books, organize his accounting, needs to know what has to be segmented. So it's not a matter of, it's not a software issue. It's exactly as you say, it's deeper, it's a little deeper knowledge, probably with a little bit of consulting, who knows what the end product needs to be, and the front end knows what they're actually doing. What sorts of things are research and development? What sorts of things are strictly running an office?
Well,
and it's a combination, and it's not a software issue.
Yeah, when we first talked, one of the things we talked about was the hemp industry and its ability to potentially qualify for R&D. Well, many of you will recall that the original Farm Bill provided for people to grow hemp, but it was only within an exception for research within federal law that they were able to do that. And technically, you're supposed to be conforming to certain rules, certain types of seeds and things like that. But by definition, that would mean everything you were doing was research, because you were within the framework of the federal law that allowed you to go off and all the states that their statutes to the Farm Bill, the federal bill, in order to do that. So I think a lot of times startups are engaged in research without knowing they're in research. And for those of us who've done that too many times, we're engaged in research long beyond where we thought we were going to be in research.
There's two things I'd like to add to that. In regards to hemp specifically, there was still one problem with the 2014 Farm Bill and getting an R&D tax credit, and that is Code Section 280E, which says that any business owner touching a Schedule 1 or 2 substance is unable to deduct anything beyond cost of goods sold. And the R&D tax credit is beyond the ordinary calculation of cost of goods sold. So they were ineligible to receive this up until the new 2018 Farm Bill became law with the Agricultural Improvement Act. So that's one thing that changed things. So yes, we have some differences there and some legal issues, but then we get into the nature of the question itself of how can we open this up to more businesses, new businesses, startup businesses that have few employees, not tons of revenue. And I think the answer to that is twofold. One, many businesses, including the ones that I work with, operate on a, what I'll call it at best nomenclature, a contingency basis, meaning they will charge you based on the savings they generate, and if they don't generate any savings, they don't charge you any fee. The problem is that you have to be of a size that's big enough for them to go into it knowing that their initial costs plus profit determination are likely to be met. And that usually eliminates the smaller businesses for all but the WOTC idea, which can be done for very small businesses. But for R&D and for size of property ownership and things like that, there tend to be larger minimums for a contingent-based business to offer those services. Now, you mentioned how can we improve upon that? How can we create technology, software, other tools that work like QuickBooks has done for a smaller entry-level fee and still accomplish the same thing? Perhaps that'll come in the future. Perhaps that can be an add-on where the software does it, but you just need to have a small fee with a specialist who can help you categorize the things that your software can quantify. That is not something that the companies that I work with, and I work with multiple companies to accomplish the things we talked about, that's not something that any of the groups that I work with, their business models aren't built around that, but it certainly could exist.
Consulting, you mean, or?
Yes, they don't do straight consulting hourly. They work strictly on a contingency and a project partner basis. Whereas there might be others out there who would charge on an hourly basis to do some consulting to help someone set up the parameters of software to then be able to capture that. But that's not something that I'm familiar with.
What that might do is in an innovation hub, it might be that collectively all the businesses in there charged a fee in the aggregate would be enough to pay or entice somebody to come in and do a day of consulting, do a round-robin meeting with each of the businesses and answer those questions, where none of the businesses would ever be able to justify it individually. And at the same time, somebody within the support group of the Innovation Hub can act as a translator and mentor and help implement that after the consultation and help maintain it over time. But yeah, I agree with you. When we're talking about pushing the envelope in innovation, all too often, as we've seen, is the small business doesn't get any break for that the same break will go to a large organization. It's a scale thing. There was a study done by the Office of Advocacy for the Small Business Administration that said for a small business to meet the same regulatory structure as a large business, they'll spend almost 50 cents more, $1.50 for every dollar spent by a large business. And it's simply because scale doesn't work in that micro scale in the startup. And that's where most things are trending though. So we're moving towards a series of contractual projects where it's kind of like, I call it pickup game of innovation. I need 5 guys. And the project we were mentioning down in New Mexico may end up being 20 guys, but it's a pickup game. And we may not know each other yet, and we're going to come together. We're going to play a game with new rules, and we're going to do all kinds of innovation just to implement the innovation that we already have. The interconnects will be interesting. So What else are you thinking of where an opportunity zone project might really want to focus on some of the things you've talked about, or even the other things that you didn't mention yet this evening?
I think one of the bigger ones is the WOTC tax credit, because a business that hires one employee can still get that, so they don't really need to be large enough in scale. And one of the target environments for hiring this new employee is enterprise zones or rural renewal counties. And all they need to do is live within the limits of that those geographical areas. So, for instance, you have eastern Michigan, the Detroit area, full of enterprise zones because there's so much that went through a difficult period over a decade ago with the Great Depression, or Great Recession, I should say. Depression dating a little further.
We're depressed by the recession.
Yeah, there you go.
Yeah.
Depending geographically where these businesses are located, if especially you're talking about Florence, Colorado, there could be more designated rural renewal counties in these areas that don't have big cities near them. And right there, that person just living within that geographic area brings a tax credit to their next employer. So that's one.
So you refer to them as rural, what's the label?
Rural renewal counties is
Okay,
an official designation.
And how does a county get that designation? Is it automatic based upon income? Or is it have to be designated, or do they have to apply for it or opt in, or what's the?
That's a great question, and it's not something I've delved deep enough to know how it gets that. I'm going to assume it's given by the state or the federal agency that's in charge of doing that, but I don't know.
So here's what we do. Anytime we get a question we can't answer, Nate is automatically responsible for finding it out. And we're going to put together a guide which captures everything we talked about tonight in more detail, with plus links and other resources and so forth. And we'll try to find out the answer to that, because this is a common issue in rural communities, is there may be a designation that is automatic, you don't have to do anything, or you may have to opt in, which is true for like the Jump Start program or the PACE program. It's not automatic, the county commissioners need to sign off on it. And so we'll find out what this is and how to qualify, because this sounds like something, again, and as you say, in a economically distressed community, you would almost have to think that someone in the family is probably drawing on some kind of a program that might qualify for that. And so in that sense, we can take a look at that. So good for that.
Yep.
I guess I had more of a general question. From your expertise, like both of you, where do you think these type of tax incentives would be best used for different type of opportunity zone projects? Is there a particular one that just comes to mind right off the bat?
The first one is the engineering-based cost segregation, because in opportunity zones, my understanding is more people have been focused on the real estate acquisition than the starting of businesses. Now, whether that changes more over time, as Karl was talking about, is an option. But since it's more real estate acquisition heavy, the statistic that my team has is that over 90% of commercial real estate in the United States has never done an engineering-based cost segregation study. So 9 out of 10 commercial properties, regardless of whether they're located in an enterprise zone or not, but this fits the same category, haven't done this, and there's a lot of opportunity for them to capture additional savings via accelerating that depreciation, enough that Trump's Tax Cuts and Jobs Act, in addition to creating the opportunity zones, also doubled the amount of accelerated depreciation that someone can get. Now, that being said, the closer we get to the end date where some of these buildings may be sold as the sunset approaches, there is a recapture of accelerated depreciation that can exist. My team has generally identified that as long as you own the building for 3 or more years after you've done an engineering-based cost segregation, the savings generated generally outweighs any recapture of essentially advanced accelerated depreciation that you're no longer eligible for as of date of sale.
Well, let me speak to that, because this is one of the points, the new points, tips and so forth. They're saying right now, it appears within the statute that there will be no depreciation recapture at the end of the 10 years. And so this may be something that is highly useful in that regard. I'll try to get some specific information on that, or more specifically, Nate will get more information on this. But if it's not recaptured, then you would want to use every form possible, because again, this benefits your cash flow during the term, and it would, if there's no downside on the backside, you should obviously do it. Now, I will, add to your comment, a lot of the stuff being real estate right now, the rule is if you buy real estate, you have to take the building and you have to do an enhancement to it in a dollar amount equal to the purchase price of the building. You're allowed to segregate out the land or value the land from the building, but you have to do an enhancement to the building, except in those situations where the building's been idle for 5 years. So if you're going to do the enhancement, you're going to be doing a lot of the things we're talking about, stripping out carpet, all the things that have to be renewed, refreshed. And it would make sense to do the segregation and push those into that fast acceleration and take them out of the real estate value at the same time.
Yes, and I think there's one more thing to add into this. We've been talking about the benefit inuring to the owner of the property, whether they be owner-operated business or landlord leasing to a business. The business that is leasing the space, if they spend over $250,000 in renovations out of their own pocket that's not part of the lease payments, they themselves can accelerate that. Now, they can accelerate it if it's less than $250,000. The $250,000 number is what my team has come up with, where there's enough value for both parties, my team to do the work and the business to benefit from it. But the ability to cost segregate or to accelerate depreciation based on cost segregation is not restricted solely to owners. So lessees can do it too, but they generally have to spend a pretty penny of their own money outside of the lease payment too.
Well, yeah, so again, last time, our last event, we were talking about how opportunity zones impacted existing owners of real estate and different ways they could take advantage of it. And we received some information after the last event that spoke to one of the provisions within the Opportunity Zone legislation that was also talked about at the conference last week, and that is that you may basically lease a building, and the leasehold is considered to be an asset that meets the criteria for meeting the Opportunity Zone investment. So we were talking about you have to double down on the building if you buy it, but if you just lease it, you don't have to make that same enhancement. So you remove yourself from the enhancement rule, but at the same time, the money you spend on that lease does count towards the proper expenditure or deployment of Opportunities Fund money. And in this case now, we would have an additional incentive to bear
Upgrade.
more of the cost, more than the landlord, if we're talking about cutting the deal with the landlord to do the improvements ourselves. So that we would qualify for this type of a benefit.
Yes.
So that would be really cool. So we're basically running out of time. So we're going to call it an evening here for this event of Opportunity Zones Meetup. As we mentioned before, welcome. This program is put up on videotape and broadcast, available for download on YouTube 24/7. So if you've nothing better to do on a Saturday night, try to find something else other than watch this. But if you're watching this, go for it.
I like the videotape comments. So not only are we both old enough to understand analog has to be converted to digital, now we're still talking about it instead of recording in digital.
Yeah, well, we are recording in both tape and digital, just to keep it. We're straddling the fence between the old and the new. But yeah, it's posted up on YouTube, and we'll get out an announcement on that as soon as Steve completes his excellent editing, and go from there. As I said, we're always looking for sponsors. We're also looking for people with projects or funds who would like to take 5 minutes and stand in the front of the room and share with us what you're doing there as kind of an update, a short pitch, so to speak. and then we're looking for topics going forward. It seems like we've covered a fair amount of ground, and we're continuing to look for case studies that allow us to understand better how to best optimize an opportunity zone investment as well as manage a project. So if you have any interest in doing any of those things, feel free to contact me. My name will be on the video. At the end of the video, you can contact me there, and we'll go from that point forward. Thank you all. Okay, that brings us to the end of part 4 of tonight's program. I'm going to, at this time, go through some of the resources that are available to you if you're putting together an Opportunity Zone project or a fund. And these are sources of information that we've identified since last year that either share documents or information or provide services or technical support that may be of benefit to you with regard to your particular project. The first of these is the state of Colorado. Jana Persky is the director of the program involving Opportunity Zones for the state of Colorado. Jana continues to act as a major spokesperson about Opportunity Zones to make people more aware. And then they have a particular program, which is a matchmaking program on their site, which you can now go to and register, whether you're an Opportunity Zone business or not, and put yourself out there where people can see you and know that you exist. When we're talking about what we want to do within our fund, we want to take this kind of activity and enhance it, getting into a lot more details. So from a database standpoint, we're going to have more elements that we can determine that are related to each other so that you're getting a more precise match. And we're going to be actively adding information to this rather than depending upon people to come and post their projects. Another source is Interactive Map of Colorado. You may find one on the website for the Office of Economic Development, but Ross Hare has set up this one called Oz Colorado, and he works in the real estate industry, so this has additional information beyond the Opportunity Zone information available at the state on different things involving real estate for all the communities that are in these many opportunity zones that we have in the state of Colorado. As I mentioned earlier, tonight's program is video recorded. Upon editing, it'll be posted up on YouTube. It's under my channel, the Karl Dakin channel. It's free access. You can watch it 24/7. Hopefully you've got better things to do than watch my videos all day, every day. But we have a lot of people who benefit from having access to this information without having to travel all the way to Denver. We're not only putting this out where we have people across the state of Colorado viewing these videos, we have a number of people from other states who are now watching this as well. Yet another group, there's a Facebook group at this listing, and you don't have to worry about writing this down because the slide deck for tonight, once finished, will be distributed via the Meetup site. You'll get a link where you can download this, and you'll have the slide deck, and it'll have all this information in it. This is a Facebook group that came together a few months ago. They're trying to act as an aggregator of information and news and stories on opportunity zones, and so it's another place where you might look for ideas or examples, or you might find somebody who's already started a project similar to the one you want to do, and you can ask them if they will share that information with you. The Oz Guide is an online newsletter by Medora Ventures. This is a kind of a weekly online publication, and they're hitting a lot of the big projects that are in opportunity zones, and they're also getting experts who are talking about some of the issues that come up from time to time with regard to whether you comply or don't comply with some of the rules, or where you have to be careful not to go outside of the rules. And that's a free subscription that's available at that site. Then if you're I mentioned earlier today that the Council of Development Finance Agencies, the CDFA, This is a group that works on providing information and public education on topics dealing with public financing. So tax incentive financing, municipal bonds, anything that a city or government agency can do that might be a form of funding or financing. This group puts together these educational programs, and they're top-notch, and you can get certified as an expert and things along that line. And they've currently just completed another workbook and a series of workbooks on the financing of the food industry. And if any of you are working on food projects, you really should take a look at what they're doing there. I'm going to post the information and the links up for that again on our website, so you'll have an ability to see those. So I'll be putting out an email and putting it into the discussion page on the Meetup site. But a really good group, do excellent work in that area. Yet another one is the National Council of State Housing Authorities. They've created a directory of every Opportunity Zone fund that they can find. It's not complete, but it's the best single site I know of for listing Opportunity Zone funds of all shapes and sizes. And I'm not certain how often they're updating this, but it creates another source of information to go to. And this is another group. It's called the Global Institute of Innovation Districts. This is a new nonprofit that was created recently, but it's a spin-off from another institution that's been working on the concept of innovation districts. And I agree with their thoughts that they express that innovation is critical to success of any economic development project, to the success of any community. And they're putting out information on how that can be achieved, and also providing information on different projects where innovation is made a core factor. And that brings us to my contact information. This is the Meetup. This is our group right here. If you go to meetup.com, Opportunity Zones, that is our group. Anyone who watches this video is free to join this group without charge, and they can benefit from all the information that we distribute out to the group as we try to do these events roughly twice a month. We have 2 more scheduled for November and 1 for the month of December, and then we'll skip into January. So we have 3 more events yet this year. And we're going to be continuing to work on things that people bring to us as issues or topics that appear to be something a lot of people would like to know about. On my website for dakincapital.com, we are posting the guides that we create for each one of these events. Nate and I are working on creating essentially a more deeper narrative with more information and more illustration. For each of the events we've put on this year. There's, I think, 7 or 8 now, and you can get a copy of each of those and download those for free as a PDF from my website. Finally, as a sponsor and as the presenter tonight, feel free to contact me if you have a question or are looking for assistance in putting together an Opportunity Zone project. My goal is to help all the communities in Colorado and also now in New Mexico take advantage of this tax legislation and use it to help your community be all it can be. And so if you need some help along that line, please contact me. If I can't help you, I'll try to refer you to someone who may be able to do that. So that brings to a conclusion tonight's program. So may your tomorrow be filled with waves of money, and good evening and good night.